Hello traders and future millionaires, welcome to this amazing video where I'm gonna teach you this awesome 1-minute scalping strategy which you can use no matter if you are a beginner or not. I wish that I would be having such a strategy presented to me when I started trading 3.5 years ago, but now here I am and I'm presenting this strategy to you. My name is Chris, I'm the owner of ChrisFX and the SMC Trader, and I'm helping traders achieve their goals, quit their 9-to-5 jobs and also get funded. So let's begin with this video, which is gonna take place only on the 1-minute time frame. So this strategy, guys, will take place only on the 1-minute time frame. You don't need to use any other time frames. You do not care about any kill zones. All you care about is some point of interest, which an FVG in this occasion, fair value gap, a fair value gap for those who are beginners and are not aware of what it is an area which is, let's say, created by 3 consecutive candlesticks, which has not been tested in the middle. So a fair value gap would be this area right here, this gap that you see. Another one would be this one right here, and so on and so on. Now, what you need to do, here is a perfect example as I see it. Let me take you back in time because I want to show you something fantastic. You don't really care about the trend, even though it plays a role. Here I see already this thing playing out. Even if I take you back in time, a little bit more back in time, this thing played out twice. So you have to identify 2 almost equal lows or equal highs, and you will tell me these are not equal, Chris. This is a difference of, let's see, 0.2 pips already, and I will tell you this with this strategy will be considered almost equal lows in this occasion. What you will say now below these 2 areas, because you need at least 2 lows or at least 2 highs, because you want to see a grab of liquidity. What do you see below this area? Do you see a fair value gap? Yes, you do. This one. Let's make it a fair value gap. This one has been tested though until this area over here. So the remaining part of this fair value gap is this area right here. What you can do in this occasion and what this strategy is saying, you can go ahead and place a pending order already right here. You can either go ahead and place a stop loss below the fair value gap or a stop loss below the lows of this area right here, or even below this candlestick, which is the middle candlestick that created the fair value gap, or the first candlestick out of the 3 which created the fair value gap. So this is number 1, this is number 2, and this is the number 3 that you see right here. So I will place my stop loss at the bottom of this candlestick, which is the first one which created the fair value gap, and I will make it very tight, and I will get activated into this trade as you see right here, and you can target whatever you're gonna target. You can go for a fixed 3-to-1 as an example, reward to risk, which is very easily hit as you see right here. Now I went a little bit too fast. Okay, a little bit too fast. Now let's move a little bit forward and see what do we see right here. In this occasion, I don't know if you can use this thing. I don't think you can use it. You won this trade. It is a little bit tricky because we have a fair value gap all the way down here, and those lows have been penetrated. You cannot know if this will work out in this occasion, so I cannot show you this example as I'm going through it right now. I have to move forward and find yet another example for you, which I think I have already found, if this is an example that qualifies. And I think this is an example that qualifies, and it is a little bit tricky. That's why I'm taking you step by step. So in this occasion, we have this zone, let's say right here. It got penetrated once, correct? It got penetrated once, twice. We tested this FVG, and those you can exclude now. This one, okay, you can see that those are almost equal lows again. Again, there is a difference, I know, but there is liquidity. When you see equal lows, I want you to wait. So the premise is that people who see this one as support area and they are already buying, what you are actually doing, you are waiting for an additional penetration, but you are combining it with the concept of fair value gaps. What do you see here at the bottom of this movement right here? This is this movement right here. You see that there is a fair value gap of the 1 minute time frame, and we are only using the 1 minute time frame here. Okay, which are the 3 candlesticks here that created this fair value gap? It is those candlesticks. 1 is this one, 2 is this one, and 3 is this one. If I take my trade, I will take it from the beginning of the FVG, and the stop loss is gonna go below number 1 candlestick, which is this candlestick right here, and very tight, of course, as I said. And of course, those are tiny stop losses. This is scalping right here, and the commissions are gonna do a damage. They're gonna do it, certainly. But imagine we have taken already a position, and now it is your time to take a second position from here to here. This only took 1 hour and 39 minutes. So if you get very experienced in identifying those areas, okay, then you will have something like that playing out. Look at that. And maybe you are the type of person who wants to go ahead and close partials somewhere around here and then target way, way, way higher. Look at this beauty. And now the scenario you see, it plays again. This was the first example. You identify almost equal lows. In this occasion, we have an uptrend, let's say on the 1 minute, this whole thing from here to here, which has taken only 5 hours, is an uptrend on the 1 minute, which might be just a retracement on another time frame. Again, you're expecting people to buy here. You see the reaction, almost equal lows, penetration, and on the FVG, we see the final reaction. Now, in this occasion, you should be having another pending order all the way down here. So you should place this pending order, and you should be having another pending order with a stop loss below the first candlestick, which created the FVG, because you don't know, now we see it in retrospect, if price would be retracing from this FVG, or if price would be doing that in this occasion and retracing from this FVG. Okay, but if you get activated and win the trade in the one, then you forget about the other one unless we create more equal lows. In this occasion, price came back and reacted from this one as well. We couldn't know that. This is outside this strategy. We could not know that, guys. Now you will see this thing playing out again and again. I'm trying to check out if there is another example, probably a short example. I don't see one for the moment because we are moving, generally speaking, in an uptrend, but you can ride this thing up and down. There is no problem at all. All you need to find is almost equal highs and almost equal lows. Let's move elsewhere and check out more recent price action. For an example, this would be a losing example. Let me show you. Here you have a bunch of equal lows, correct? A bunch of them. And I will note that down as liquidity again. Okay, all those are equal. Do I have a fair value gap below it? Yes, I do. This part right here. This is a fair value gap. You would be placing the pending order right here. And this would be a loss, and you would be having another pending order all the way down. Actually, you would be having, another one either down here or over here. Only two you should be using. Let's see if this one would be a loss actually, because I see that we probably had some reaction. No, this would be an additional loss. So here you would be having this occasion two losses. This is a strategy that do not expect it to give you an unfair, let's say, advantage in the market. But you can expect, for those of you who want action, a lot of action, you can say that it is a scalping strategy that can give you a winning advantage, and it is a strategy which is very appropriate, let's say, for those of you who want to scalp. Okay, Now I'm searching to find other examples. I cannot find a good example, and of course you can have more pairs open. Okay, let's do that. Let's see if we have something else. Do we have something here, for example? Yeah, here we have another example. Beautiful. This is a very good recent example, the most recent, equal lows, almost equal lows. We know, in other words, that there is a bunch of liquidity below those lows. Do I have a fair value gap below this area? Yes, this one, right here. Let's see until where it was not tested. It is this fair value gap over here. In this occasion, of course, your stop loss should go, as I said, at the beginning, at the bottom of this candlestick which created the FVG, which is this candlestick right here and exactly on it. So your stop loss would be 6.4 pips, would be exactly right here. This goes in the close of the market, and this could just play even more, or you could just close it at the close of the market. In this instance, there is an extra, let's say, possibility. There's a huge probability that price is gonna come and retrace and test, for example, this FVG. It created those equal lows, gave us a retracement here. It might create more equal lows here. Okay, do something like that, penetrate them, come here, and then continue. So this is the premise of this strategy. It is something that can work out perfectly, and of course you don't only have one pair, you can have 3 pairs, for example, open, and you can check it out whichever one is giving the best setup. Now, what do you see in occasions such as this one? If you get a lot of experience with this strategy, you will see that over here there is also liquidity, especially in smaller time frames. Okay, when you see pin bars such as this one right here, people are buying. What is there below this area? Look at this perfection. Yes, it is a perfection in retrospect, guys. I know that it is a perfection in retrospect, but if you go ahead and backtest it, you will see that this is working. If you do it properly, you would have again 2 pending orders. Your movement was this one which created this whole thing, and there are 2 fair value gaps, one small one, and the stop loss would go at the bottom of the first candlestick which created this one, which is this candlestick right here. Okay, 1, 2, 3, and you would be having a second pending order exactly right here with a stop loss below this candlestick. So you would be having 2 pending orders. You see, the first one got activated with a 4.3 pip stop loss. This one gave you until here only, and within, let's check it out, within how long? 50 minutes, an 8.6 to 1 reward to risk. And of course I advocate that you will be closing partials along the way, but you can go ahead and target aggressively. Okay, so this is something that is working again and again and again. Even here, let's bring back those areas. Even here, if you are very aggressive with the strategy, you can say that my equal lows were those ones right here. This and this, so those are my equal lows in this occasion. Retail traders will be looking to buy again when price comes here. And you can be very aggressive and say, I am willing to take the fair value gaps below. So you are willing to place your pending order exactly right here instantly. Excuse me for that. So this is pretty much the strategy, and it is important that I'm showing it in retrospect, let's say, because otherwise here we talked about this example, otherwise I wouldn't be able to explain it to you. You can go ahead and backtest it, and if you like my teaching style, then you can go ahead and enroll in my academy, where I'm showing every single strategy that I'm using, and you can become an expert or enroll in the trading signals, where I'm repositioning, and I have a PDF explaining how much I'm risking and how you should be treating your accounts depending on the size of your account. And of course, you can go ahead and book a one-on-one mentoring with me, where I will be teaching you the specifics and the rules that I have, because I have a very unique rule-based strategy which does not allow room for discretion. Furthermore, go ahead and subscribe to my YouTube channel for more free educational content. This is gonna do it for today, traders, and thank you all for watching. Until next time.